They fly under the radar, smiling in public while moving fortunes in private. The ultra-rich have found ways to bend, dodge, and slip through the systems meant to regulate them. They don't just avoid taxes, they escape the entire framework that governs ordinary people. It's not illegal, not always, but it's deeply strategic. And it starts with mastering the world of offshore finance. The first rule: location. Billionaires don't keep all their money in one country. Instead, they scatter it across the globe: Cayman Islands, Luxembourg, Panama, Singapore. Each location offers a different advantage: banking secrecy, low or zero taxes, limited regulation. Their wealth becomes a moving target, hard for governments to trace or tax. They use shell companies, businesses that exist on paper but have no real operations. One billionaire might control dozens, even hundreds of these entities. Through them, they shift profits, mask ownership, and hide assets. If one company faces scrutiny, another steps in. It's a legal maze designed to confuse, delay, and protect. Trusts add another layer. A billionaire places their assets in a trust, names someone else as the owner on record, and technically walks away. But in reality, they still benefit. These legal tools allow them to avoid estate taxes, creditors, and even ex-spouses. The true power lies in separating control from ownership on paper. Many billionaires use tax residency shopping. They establish legal residency in tax-friendly nations like Monaco or the UAE while spending most of their time elsewhere. Through careful travel logs and legal teams, they ensure they meet the bare minimum requirements. It's all about appearances, just enough to keep the taxman away. Then there's the trick of profit shifting. A company sells intellectual property like patents or logos to a subsidiary in a tax haven. That subsidiary then charges the parent company expensive licensing fees. On paper, the parent loses money. In reality, the money just moved offshore. Governments see a loss. The billionaire sees a windfall. Private jets and yachts aren't just for luxury, they're loopholes too. Many are registered in countries like the Isle of Man or the Marshall Islands to avoid taxes and regulations. The billionaire might spend millions on a vessel but avoid sales tax entirely. With the right flag, the system becomes optional. They also borrow against their wealth. Rather than selling assets and paying capital gains tax, they take out massive loans using stocks or property as collateral. The cash is tax-free, the interest is deductible. And because they never realize income, it never gets taxed. It's called buy, borrow, die, and it's perfectly legal. Philanthropy becomes a strategic tool. Billionaires set up private foundations, get massive tax deductions for donating their own stock, and then keep control over how the money is used. Sometimes the foundation pays their salary or funds projects that indirectly benefit them. It looks charitable but functions like a family office. Some use citizenship arbitrage. They obtain multiple passports through investment or ancestry and choose the one with the most favorable tax structure. This gives them more flexibility in banking, travel, and reporting. If one country becomes inconvenient, they simply move their legal identity elsewhere. They hire armies of advisors, tax attorneys, accountants, lobbyists. These professionals don't just follow the law, they help write it. In many countries, billionaire-backed lobbying efforts have carved loopholes directly into tax codes. When new laws emerge, these teams are already crafting the next escape route. When leaks like the Panama Papers or Pandora Papers happen, the public gets a rare glimpse behind the curtain. Secret accounts, undisclosed trusts, hidden real estate. But even then, few face consequences. The systems are too complex, the structures too obscure, the resources too vast. By the time regulators catch up, the money's already moved. The real estate game offers more camouflage. Luxury properties are purchased through anonymous shell companies, making it hard to track the real owner. Some are flipped quickly to wash money, others sit empty, just another safe place to park cash. From London to Miami, entire towers exist as vaults for the global elite. Cryptocurrency adds a new dimension. While many exchanges now enforce some regulations, crypto still offers pseudonymity and global mobility. Digital wallets, decentralized finance, and tokenized assets let billionaires move value without banks, borders, or oversight. And in many cases, it's nearly impossible to trace. Even art becomes an escape. High-value paintings are bought and stored in free ports tax-free, high-security warehouses near airports. The artwork never enters the country of purchase, avoiding import duties. The billionaire gets an appreciating asset, off the books and out of reach from authorities or public eyes. When regulation gets close, billionaires shift strategy. New taxes, they preemptively move assets offshore. Reporting rules, they set up separate legal entities. Investigations, they stall with endless litigation. Their wealth isn't just protected, it's agile. It adapts faster than laws can evolve. Some nations have quietly welcomed this behavior. Competing for wealthy investors, they create golden visa programs, offer favorable tax rulings, or refuse to participate in global transparency agreements. These places become financial safe havens not just for money, but for legal immunity. Meanwhile, the average person pays taxes on every paycheck, every purchase, every gallon of gas. The contrast is stark. The wealthy don't break the rules, they pay to rewrite them. The system isn't broken for them, it's functioning exactly as they designed it. The gap isn't just about money, it's about access to escape routes. Critics argue that this erodes democracy. When the wealthiest avoid contributing their fair share, public services suffer. Infrastructure decays, inequality deepens. Trust in institutions fades, but despite public outcry, change is slow. Political will is often no match for financial power. Reformers call for global cooperation, shared registries, unified reporting standards, coordinated taxation. But enforcement lags, too many loopholes. Too many incentives to keep things as they are. For every new rule, 10 new workarounds appear. The system evolves, but so do the billionaires. Some whistleblowers try to expose the truth. Journalists dig deep, investigators push boundaries. But even with leaks and scandals, most of the system remains intact. The public gets angry, the headlines fade, the structures stay. And behind them, the rich continue slipping through the cracks. It's not just about saving money, it's about control. Avoiding oversight, shielding empires, buying influence without accountability. This isn't financial planning, it's strategic invisibility. The goal is simple: to live outside the rules while shaping them from above. An escape not just from tax but from consequence. In the end, it raises a chilling question. If the system only applies to some, is it really a system at all? Or just a facade one the rich can walk through at will, while the rest remain trapped behind glass? For now, the answers remain hidden, locked behind numbered accounts, encrypted emails, and boardroom doors.